All right, then let's get into this market picture now, which certainly has been quite mixed of late then as well, and pretty much much of the same as well when one takes a look at that Asian trading picture there as well. Much of the Hang Seng sat in negative territory to close out the day's trading there, while the Shanghai Composite was the biggest gainer, 1.2%. Big questions around the stimulus efforts, while Chinese data seems to be pointing to a fragile kickstart back with regards to that economy there. So things like retail sales not necessarily jumping as high as one would have hoped as well, with the industrial output also beginning to kick in, but much slower than analysts had expected. Negativity, though, when it comes to the European market, more than 1% lost across the board for these main indices. Then just over 1% for the DAX out in Germany, with the FTSE 100 and the CAC 40 as well out in France going up going down 1.8%, should I say, there as well. The European fragility of the market seeping through on that front there. Onto the local index front, then 0.5% down for the JSE All-Share today, kind of closing the week, unfortunately, in some sense of negativity, so not really enjoying itself too much. 1.1% lower than for the financials, which seem to be struggling on that front. The banking counters are showing negativity there. They're the biggest losers, 2/3% weaker at this point, while the miners and resources showing some sense of positivity. Of course, investors continuing to shield their investments by going into those counters as well then, and as you can tell, those headed higher. Just in terms of stocks that have gone up today, the biggest gainers have been Brait, which has gone up 11.1% then as well, just around R2.80 a share there. Sibanye Gold still sitting pretty, more than 10.5% higher today for Sibanye Stillwater so far. It's just at 55 Rand a share on that front, with City Lodge also climbing up nearly 10%. Of course, they're trying to come up with even more funding. In terms of losses then, Sasol has seen itself go down today so far. It's at 149 Rand a share. It's down 5.6% then as well, while the Textainer and Redefine Properties at 3.9% weaker today, R2.70 there a share. Truwords also going down 3.8%, so clearly some weakness still in those retailers. Onto the commodities board then, onto your currency front, still weakness, unfortunately. Not much to write home about on this front. South Africa's economy could drop off by as much as 36.2%. If anything, all the data that we've put together has certainly come about. Things like manufacturing and mining, which take up about 20% of South Africa's GDP, have all fallen over the last 3 months, or the second 3 months of the year. At the same time, trade, which includes retail sales numbers, which also came out yesterday, are also weaker for the 3-month period of that second quarter. So again, we're bound to see that the recession South Africa has experienced over the last while may even deepen and get worse. 17.48 for a US dollar. The euro is slightly weaker as well, or the rand is against the euro slightly weaker, with the pound headed towards that 23 rand mark. Slight weakness for the Brent crude price, just below $44, $45 a fine ounce there, with gold sitting at 19.45, 9.46 then for platinum, both of those going down quite heavily as well. Warwick Lucas joining us now as we unpack this market picture just a little bit more. Warwick, thank you so much for the time. So, weakness by the seams of things, still no stimulus out in the United States, and fragility when it comes to the growth of the economics, or the economies rather, globally. So, I guess it is down from here.
Hi, Arabella, and to the viewers. It certainly is a tricky picture. I think in terms of the local picture versus the offshore, I think it's important to bear in mind that our lockdown and vulnerable period to the virus, i.e. during winter, has been a longer one as compared to the Northern Hemisphere. We're, of course, only now starting to show some signs of emerging from winter, whereas they've had a long summer, which has taken a bit of pressure off them. Furthermore, those economies have had the chance after the initial lockdown that whoever was able to save during the period of lockdown, or whoever had deferred projects, building projects and so on, would be able to bring them out and bring them online. And that, of course, will help rebound those economies, whereas the same effect in South Africa is going to take a little bit longer to manifest. So still a bit of slowness ahead, I'm afraid.
Yeah, how tough is it going to be then for the gold companies or even just miners in general to find some sense of stability? The prices keep going up, production falling, of course, due to COVID-19. But do they continue to invest then in trying to mine, particularly in South Africa, or do they just hang out and really wait for that for the prices of the platinum and gold commodities to continue to just go up and up?
I guess that's going to be quite an interesting one, and I think that they've got to take a view on whether or not they forward sell. I mean, a lot of gold companies got themselves into trouble in the past on hedging, but in reality, even with lower volumes, they look as if they are having enough margin to be able to keep on profitably. So I guess that really depends on the view that they take and whether they forward sell and of course whether the gold bull persists.
The retail sector is always tough, but Woolworths has certainly suffered the brunt of it over the last number of years. Any hope for the business yet?
I think there's a lot of value in the business, but they certainly haven't done themselves any favors with the David Jones acquisition, and now it's really come from being some kind of a proposed growth driver to being a problem that has to be managed, and I think that fills a lot of bandwidth that's I guess quite unwelcome at what is really a tough time for anyone, particularly focused businesses already will struggle. Unfocused businesses will struggle much worse in a really tricky environment like this. So I think from their point of view, the management of the future of David Jones is now going to be a critical component of the next 24 to 36 months of this business, i.e. do they fix it or do they manage to divest themselves of it in some way that doesn't cause lasting damage to the business?
Going to be tough to try and find some sort of sustainable route, I suppose, then for the business when one considers that generally retailers are now continuously struggling. I mean, you've seen the likes of ShopRite saying that they're going to ditch Nigeria and their operations there. Yes, may not be South African, but Chop is also deciding to focus really on their own operations in Botswana. So does Woolworths sort of retract and become a smaller entity, or do they continue at this stage and perhaps try to at least gut it out?
I think a lot of shareholders will be hoping that Woolies chooses some sort of consolidation. I mean, after all, the clothing business has been a bit variable. Even the core South African one has been a bit hit or miss. It's certainly finding some focus, I think, would be very welcome indeed. I mean, the food business, as we can see from the latest trading update, continued to come through. And it was the clothing business that struggled a little bit in South Africa, and then of course the Australian businesses, and particularly David Jones, really struggling. So I think focus will be a big plus for Woolly shareholders.
Yeah, we'll certainly see how things fare. Warwick, thank you so much for the time, and I'm glad you actually as well recovered from your COVID-19 saga as well. Thank you so much for joining us.
Thank you.
Really appreciate it here on SABC News. Warwick Lucas there is from Galileo Capital, who joins us, of course, every Friday as we unpack this market movement.